Good evening, everyone. This is second lecture on valuation of share. Okay. So in earlier video, we discussed about the valuation of share. What is valuation share? It is the process in which we determine the value of share, or we determine the price of the share, right? So we also discuss about the methods. There are mainly three types of methods. One is net asset method, second one is yield method, and third one is fair value method. Okay, now we discuss about all these things. Now in this lecture we are going to do practical problem on the net asset method. So net asset method is also called what? Intrinsic value method, also called what? Asset backing method. Okay, so as I discussed, this net asset method is depend upon what? It depends upon the assumption of liquidation of the company. If we liquidate company today, then what will be the remaining net asset for the equity shareholders that we need to bring out after selling all the assets and paying all the obligation of the liability holders. Okay, so after that we need to deduct what? This thing, preference shareholders claims. Then whatever remains, that will be the equity shareholders portion. So according to that, we will be doing what? We will be finding the value of share. Okay, so in next our video we will be discussing about the yield method. So this is net asset. So let us see the format for calculation of net asset. Okay, so since we are doing the net asset method, first we have to find out what? Net asset. Okay, so net asset, because the formula, what is the formula for this thing? I will write formula first. Okay, value of share under this thing. Net asset method is net asset available for equity shareholder divided by number of equity shares. Okay, number of equity shares. This is the formula. So we need net asset available for equity shareholder, and we need number of equity shares. Number of equity share capital, you can say. Okay, number of equity share capital, you can say. Okay, then look, how are you finding the net asset available for equity shareholder? This is the formula. First you have to write all the assets at realization value. Okay, all the assets at realization value means market value, not in book value. Okay, so you have to see the balance sheet and you have to write all the assets at realization value, market value. If both the values are given, like the book value is also given and market value is also given, then you have to write the market value of that particular asset. Okay, so we are writing all the assets at realization value except the fictitious asset. Fictitious asset means what? Discount on issue of shares. Okay, and you have got loss on issue of shares, loss on issue of debentures. These miscellaneous things are fictitious asset, and that generally that would be written in the asset side of the balance sheet. So you have to exclude them. You have to write other assets, all the assets, but not fictitious asset. Okay, then after writing all the assets at realization value, you need to deduct all the liabilities. Okay, all the outsider liabilities. Okay, then when deduct liabilities from asset, it will be net asset. So but you need net asset available for the equity shareholders. Okay, so net asset, after that you need to deduct what? Preference shareholders claims, like minus preference shareholders claim. And if there is a proposed dividend, okay, this proposed dividend is for equity shareholder, if that is written there, then you need to deduct that also. So after deducting that, whatever the amount remains, that will be net asset available to the equity shareholders. Okay, so if you bring this, you can easily put this value and this will be given. Okay, in that way you have to calculate the value of share from net asset method or intrinsic value method. Okay, now let us see one question. Okay, this is the question. See, question is like this. They have given the balance sheet on the horizontal balance sheet. See, equities and liabilities, rupees. Okay, first equity, what they have written, shareholders fund. Shareholders fund, under shareholders fund, what they have written, equity share capital, 20,000 equity share into 10, that is 2 lakh. General reserve, they have written 1,45,000. Profit and loss act, loss balance 32,000. Okay, under non-current liabilities, okay, employees provident fund 15,000. This is a vertical balance sheet. Okay, you should be now familiarized with vertical balance sheet as well. Okay, because under the Companies Act 2013, now you need to prepare vertical balance sheet only. Earlier we used to prepare horizontal balance sheets, but now it's mandatory to prepare the horizontal balance sheet. But still, in many universities and colleges, still we follow horizontal balances also, balance sheet also. If question comes through horizontal balance sheet, then you should not be surprised. Okay, but you should be familiarized with vertical balance sheet also. So under non-current liabilities, employees provident fund is given 15,000, and this thing current liabilities, trade payable 86,000, workman saving fund 28,000, and short-term provision for taxation is 12,000. So total is 5,18,000. Okay, so under asset side, they have written was non-current assets. Okay, so land and building, I have written here 2,10,000. Okay, plant and machinery 70,000, goodwill 40,000, investment is 20,000, but market value is also given. So you have to take market value. Okay, because you have to take in realization value. Okay, then current asset, inventory 60. Okay, 60,000, trade receivable 80,000, cash at bank 30,000, miscellaneous, yes, shares issues, expenses. Okay, so 8,000. Total is 5,18,000. Okay, so what else they have given is there's a small adjustment is also there. So adjustment is land and building have been valued at rupees 3 lakh. Okay, that means we have got land and building 2,01,000, but here the market value or realization value is 3 lakh. Okay, now you have to take this because this is market value. And plant and machinery worth rupees 60,000. So initially the value of plant and machinery was 70,000. Now it has changed into 60,000. This is market value, present value. So you need to take this. Okay, then rupees 5,000 of the trade receivable are bad. That means what? This is this is trade receivable. This is data's thing we are supposed to receive. Company is supposed to receive this 80,000. So out of 80,000, this 5,000 got bad debt. That means company won't be receiving this thing. Although the company is supposed to receive 80,000, out of that 5,000 is now bad debt. Okay, it's a very bad debt. It means you cannot expect to recover this money. So you need to deduct 5,000 from 80,000. Okay, then goodwill may be taken at rupees 70,000. Earlier we have goodwill 40,000. Now you need to take at 70,000. Okay, then find the value of shares on net asset basis. written here. So you have to find the value of share under net asset basis. Okay, now you know the formula. Value of share is net asset available for equity shareholder divided by number of equity share capital. Okay, so let us solve it. Let us solve it. Now look, calculation of net asset of equity shareholders I have written here. Okay, so you know the formula now. All the assets at realization value, all the assets should be taken into realization value. Okay, now first you have to take what assets, land and building. Here 2,10,000, but market value is 3 lakh, so we have written 3 lakh here. Okay, then second, plant and machinery 70. Here this thing market value is 60,000, we have written there. Okay, then comes goodwill. Okay, goodwill you have 40, but market is 70, you have to write goodwill 70. Okay, likewise, then what else? Inventory is what, how much? 60,000. so inventory, before that we have got investment also. Okay, investment is 30,000 market value, 20,000 is book value, so we have to write in this thing 30,000. Then inventory is 60,000, straightway 60,000. Okay, trade receivable 80,000, so we have to deduct 5,000, that is bad debt. Okay, so after deducting it will be 75,000. Okay, then we have got cash at bank 30,000. Then this shares issue expenses, this is fictitious asset. Okay, miscellaneous expenditure. So as I told you that you have to take all the assets in excluding what, fictitious asset. So we should not be taken shares issue expenses. Okay, so now total asset will be, if you total it will be how much? 6,200, 6,25,000. Okay, 6,25,000. now you have to deduct what? Liabilities. You have to deduct what? Liabilities, as per the formula, less liabilities. Okay, all the liabilities. Okay, let us deduct liabilities from here. Okay, so we have got liabilities. What are the liabilities? We have got non-current liabilities. Employee provident fund, this is liability. Okay, this are the provident fund for employees, so company has to pay, so this is liability. Okay, so another one is workman saving fund. This is also liability of the employee. It looks like reserves, but these are what? Liabilities. Okay, these are what? Liabilities. Employee provident and workman saving fund, what respectively you need to deduct. Employees provident fund and workman saving account respectively we are deducting. Then we have got trade payable. Trade payable is 86,000. Trade payable 86,000. Then provision for taxation is also there, so provision for taxation is 12,000. when you total it will be 1,41,000. Okay, so you need to deduct from here, it will be net asset will be 4,84,000. Okay, so this is what? Net asset. Now after this you need to deduct what? You need to deduct the preference shareholders claims. Okay, preference shareholders claim, but we don't have any preference shares. We don't have any preference shares in our question. Okay, see, only we have equity shares, then directly general reserve, so we don't have preference shares, so we don't have to minus it. Okay, we don't have to minus it straightway. That means so whatever remaining amount will be whose? The remaining amount is of was equity shareholders. Okay, so net asset, after this we don't have any claim of preference shareholders, so straightway you have to write this thing, net asset. This is available to whom? Equity shareholders. Okay, net asset available to equity shareholder. Now we got the net asset available for the equity shareholders, this one. So value of share is equal to net equity, net asset available to the equity shareholder divided by this thing, equity capital. So we have got equity share capital 20,000. Okay, 20,000. Okay, equity shares. We have got 20,000 equity shares. So you deduct it from by 20,000. It will be 24.20. This is here value of each equity share. Value of shares. Value of each equity share is 24.20. Okay. So hope you understood this. Very simple. Okay. If you don't, please ask me. Okay. Thank you very much.